Hello and welcome to another lesson here on technical analysis. My name is Chris Capri. I'm the founder of Second Skies, and today I'm going to give you a brief lesson on catching reversals with Bollinger Bands. This is the first part in a 2 or 3 part series, waiting to see how it evolves. Now, Bollinger Bands are really fantastic for catching fades and reversals. Many of us are aware of the typical techniques whereby if the bands are moving horizontal, we try and trade the bounces off the lower and upper edges of the Bollinger Bands. But I want to give another technique as to how to catch reversals after there have been strong moves where they have been piercing one edge of the Bollinger Band or the other for quite some time. How do we know when the trend is over, the move is over, and how can we catch this reversal or fade? Well, let's take a look at our first chart here. So we have a period of kind of a little bit of a breakdown here, but then we come into a little consolidation after an impulsive move here. So an impulsive move followed by a corrective move in really tight Bollinger Bands, suggesting a breakout likely to the same direction here. Now we see that the breakout does happen here, and the ensuing breakout is very forceful, very powerful. This is the dollar-yen. Just happened about a week ago, and it's a very forceful sell-off here. Notice how the price action stays outside of the bands. Now the bands are containing about 95.4% of all price action, so we're easily pushing the 96, 97, 98, 99 percentile range here. Now after about a 500 pip sell-off from the previous floor that was built here, we start to see something where the pair starts to return inside the Bollinger Bands. But then it makes a second attempt towards the downside, not as low as the previous low, and definitely not piercing the other low, Bollinger Band here. And so I call this the double bottom buy here. And so what I'm waiting for is I'm waiting for a second attempt down there that really just doesn't make it towards the previous low and the Bollinger Bands. I want to get about 15 to 20, maximum 30 pips from the Bollinger Bands, and when I do get that, I'm looking for a buy signal to fade back towards the upper Bollinger Band there to catch this move here, and then trail it in case it does, so taking profit on the first low as it hits the opposite Bollinger Band, and then trailing it until it gets to reverse sharp enough where it hits the lower edge of the Bollinger Band there, and at that point I should have protected my position, or my position should be well protected. And so let's go over a couple more examples of how this works. Alright, here we have the pound Swiss, and the pound Swiss also, with the recent volatility that happened last week, was in a very tight consolidation and then had a very sharp sell-off to the downside here, even gapping from Friday to Sunday here, staying outside the Bollinger Bands. This is like the 98, 99 percentile in terms of selling here. So people were wondering, when is this thing going to end? And even after the long wick, the pair was still staying outside the Bollinger Bands, but then it starts to return back in the Bollinger Bands. Now I generally like to wait for a period of about 10 hours, maybe 12 hours before I look for that second bottom. And again, we do get our second bottom, and it's pretty decently close to the lower edge of the Bollinger Band. And so what I generally like to do with my stop here is place it outside the Bollinger Band here, or I like to place it below the previous low, and then trade it for a move back up towards the other end of the Bollinger Band. Once I take profit on this lot, then I generally like to trail the position with either the lower Bollinger Band or every 50 or 100 pips depending on the volatility, and then bring in the stop. I can either bring it to trail it with the Bollinger Band, or I can bring it to minus 15 from where I took profit, or even the middle of the Bollinger Bands from where I took profit, thereby locking in some more profit here. Let's take a look at one more example of how this works. Alright, so again we have another sharp sell-off. This is the pound yen, and we have a huge piercing here outside the lower edge of the Bollinger Bands for a day and a half here. Then the pair bounces inside back in the Bollinger Bands. The bands start to contract, suggesting that this move is probably going to be contained. Takes another attempt, and this one's probably the best one of them all. Got really close to the previous low, but didn't make a new low, and didn't pierce the lower edge of the Bollinger Band. This is what I call a perfect candidate for a double bottom buy here. And so I put my stop just outside the Bollinger Band, wait for a fade to the upper part of it here. Now this fade right here is about 200 pips. That's quite a big move there. And then what you could do again is trail it with the lower edge of the Bollinger Band here, so getting out about another 300 pips away here, 250 pips. Or what I can do is trail it every 50 or 100 pips or so depending on the pair's volatility, or put a trailing stop right here, third option, right in the middle of the Bollinger Bands, locking in some more profit here. So you can see how when you see this formation here of making a second attempt here, what's really happening is that the sellers are coming back. They've met a round of buyers here, or they've met some sort of support, and some of them are probably taking profit. They're taking another attempt to continue pushing the pair back in that same direction so they can get as much profit as possible. But what's happening is that they just aren't able to do it. Buyers are starting to get in, they're starting to gain ground against the sellers there, and they're coming in a little bit earlier this time. And so then you're going to see more profit taking, which generally leads to some sort of fade or consolidation, because if the order flow was a sell-off, well then if those people are taking profit, then we should see some sort of fade to the upside here. As the vacuum is filled because there are no more sellers anymore, the buyers are now coming in here, or the buyers are the only orders left on the table, therefore making this fade generally a pretty strong move and pretty consistent. So that's basically the strategy here. Now to review, Bollinger Bands are great for determining volume and volatility, and that's because when they're expanding we can see that there must be a huge influx of volume or capital to push the pair into the 96, 97, 98, 99 percentile. We don't want to get in that. We want to wait till the price action starts to get back inside the Bollinger Bands, because as it contracts, then it's kind of containing within that 95.4% price action there, and therefore the order flow must be shifting to a more state of equilibrium to really create those kind of moves after sharp moves that were sustained outside the Bollinger Bands for a long period of times. Therefore, this technique is great for catching reversals and fades. One thing you want to watch for is the high or low on the bottoms, or the low or high on the tops, and you generally want there to be some sort of time period in between the two bottoms or two tops there. I generally like to have about 10 to 12 hours there, because after 10 to 12 hours, if they haven't been able to make a new low or high and they've given it a second attempt, then generally what you see is the short-term players starting to exit at that point, therefore creating the perfect setup and order flow for a reversal. And the other thing is to wait or to use the opposite band for a trailing stop as you've taken profit, or you can use the middle of the Bollinger Band, or you can use it in increments every 50 or 100 pips depending on a pair's volatility. So that pretty much sums it up. For those of you that want to know about our services, we do private mentoring and education on much more advanced levels of what we're teaching here in these lessons. So if you're looking to accelerate your learning curve, then private mentoring is the way to go. What you can learn in a year on your own, you can learn in a month with a private mentor. The second thing is that we have recently launched the 2S Sniper System in 2008. It's had excellent, outstanding results for 2008, which you can see on our website. And so if you're interested in that, there still is an introductory special available for the next few weeks. And then lastly, we also do live market analysis via webinar twice a week. And so for those of you that are looking for continual market analysis and learn how to see charts like a professional trader, this is a great method to do that. If you have any questions, you're welcome to email me directly, info@2ndskies.com, or visit our website, www.2ndskies.com. Good hunting, everyone.